Yo, what's up, people? So today, we are going to be going over the importance of macros. So a macro time is just pretty much it's the last 10 minutes of an hour candle and the first 10 minutes of the next hour candle, but it is a time in which price will show the best entries and why the sweep liquidity, inverse fair value gap, create a change in state of delivery, power of three, manipulation, distribution, any one of those. But let's see. Macro times. Okay, usually there's a chart that shows the times, but I'll just tell you them right now. It's 8:50 to 9:10 a.m. It is 9:50 to 10:10 a.m., 10:50 to 11:10 a.m., 11:50 to 12:10 p.m., and then for the last trading hour, you have 13:10 to 13:40 and 15:15 to 15:45. So we're going to go over them today because today we saw some beautiful trades with the macro times. So we'll start off by just going over purely my trades from this morning. So this morning, I'm not going to be going over bias right now just because that can take a while. So I was just looking to see my model and to see a good target. And with that, I would look to take a trade. So right here, we inversed this. And I took a short here on a practice account, which was lucky, and I got stopped out. So that was all right. But this ended up playing out really nicely as once price inversed this fair value gap again, price tapped back into the fair value gap, then maneuvering price lower. So this would have been a good trade. Also, this was kind of like a 2022 model because as you can see from here, what we see here is here. So as you can see, we created that change in the market structure by breaking it, and then we tapped back into it with the fair value gap right around here, which is right here. The fair value gap was tapping in. And when I was seeing this, the first thing I thought to myself was, I'm waiting to see this get inversed. So right here, this is from earlier, I put inverse fair value gap because I was saying to myself, once this is inversed, this is a good enough for longs to this high. Because up here, we had equal highs right here. That's not like my biggest target, but we also had equal highs, right? So we'll go to the first one. So the macro starts right here, 9:50 to 10:10. So right here, we get a run on this liquidity, right? We move down. And then from this move, I was already thinking to myself, okay, so if we are bearish, we're going to keep dropping down here. But if we are bullish, we need to move up. And right here, as you can see, the biggest confluence that I could add to this trade is that 9:30, before price is bullish, from 9:30 to 10, we're going to see a protraction move or a Judas swing, a manipulation move to fake out the majority of traders, which is what we see. Price trends down, tracking some traders into shorts, and especially some ICT noobs would short right here. All right. But once I see this quick recovery, and I bet on the 30-second or 15-second, there was a nice trade within here. But within this, after seeing this candle, I was like, okay, the only possibility we go lower is if we create an order block right here by closing back underneath this bullish candle. But once I saw this, I was like, okay, this is pretty bullish. And once I saw this down close candle, I'm looking for a change of state of delivery. And once price closes above both of them, I'm in the position long, 2 contracts, stop loss below, hard stop right here because I don't think price should go down below. And if we do, then we should just purely be reacting from this order block right there. Price shoots back up, take one contract out, took another contract out right around here because the thing with this one is I was scared I was going to get stopped out. So I was like, okay, I'd rather take some profit than no profit. But price just ended up running. So for next time, I'm just going to remember to hold on my position. So as you can see, that all took place during the macro time. We had the entry. And then the second entry I took was when price closed above this, creating another order block. I was waiting to see that get tapped into. So I'll just kind of mark that out right here. So there's this fair value gap along with this order block right here. And why is it an order block, you might ask? It's just because when we have a down close candle in any sort of uptrend, when we close above that down close candle, that is an order block. So price taps back into it, giving us our entry, as you can see. So I entered right around here and took my stop around here to here. I can't exactly remember. So that was a good trade. This one wasn't in a macro time, but it was still during the morning kill zone, which is important because after the kill zone, you don't want to be taking any trades unless they're in a macro. So now those are my 2 trades for the day. There wasn't anything else, and this one was really good. Just hold your position a little bit longer, and this one was good as well. Just if you held your position longer, you could have been adding to the position rather than a whole new position. Okay, so the next one, we have another macro time right here from 10:50 to 11:10. So we are looking for a run on liquidity, fair value gap to be inversed, or tapping back into a fair value gap. So this one wasn't as clean, but we technically do have an inverse right here as we sweep out this high right here. So we swept out that high. We displace back down, closing right here, which would be your entry short, would be right there. Once price closed, entry would be right there. You'd be targeting this low, and your stop would be right there. So it's not a really good trade, but it is still the Dodgy's inverse model. So that's what really matters. And then on the way back up, there was this trade where we closed above this fair value gap right there, marking and then we this was a really good trade, is where we have accumulation right here. So we have from here to here is accumulation, right? Then here is the manipulation, and then here is the distribution. And after the distribution, according to the quarterly theory, it's AMDX. So that means X is either a reversal or a continuation. So after this, we're either looking for a reversal or a continuation of this trend, right? We get a reversal. And so this is probably one of the best trades of the day, which happens to take place directly in a macro time. So price sweeps out this high, you can tell easily, right? We create this fair value gap inside. Price inverses this one. I wouldn't have taken this one because the close would be 2 under. So I took this one. Price comes back in. You short at the consequent encroachment of that inverse fair value gap, which should be right here. You short right there. And for this one, this would actually be Dodgy's one model for life, and you'd be targeting these data lows from the morning from when news hit. We'd have this fair value gap and the close under. So technically this closed under, but this one wasn't good. As you can tell, we didn't really sweep any liquidity. There was no high. We closed underneath. Yeah, and then we had a quick recovery back. So it just wasn't something we were looking for. We were looking for something a little bit cleaner. So once we get this sweep, you would technically be targeting these lows right here. So that eventually does work out. And as you can see, this is a 6.4 to 9 trade where you're getting around 113 ticks, which is obviously crazy. If you were able to hold a runner until then, it just shows you the power of the macros. And after here, you're obviously done for the trading day because there's already 4 macros, because there's this one right there. There's this macro. And so in the PM session, we were bearish. We've closed below this, tapped into here. We've tapped not necessarily back into this breaker, but we have this breaker right here. We have this consolidation zone, and we're just looking for shorts pretty much. We're looking for a bullish fair value up to be inversed. And as you can see, during this macro time right here, we have this beautiful bullish fair value gap that takes out this high right here. And after it takes out this high, we don't see displacement above it. We see a quick retracement closing below this without touching this high, because right now that is, or not right now, but if you're going to take the trade, that is your target right there. So price comes back in and you enter short, your first TP being right here, stop loss either here or here. It would be a close above, so your hard stop would probably be above the bodies, or maybe above the what's it called, the consequent encroachment of this fair value gap right here, just above it, because price would not come back up there. Obviously, if it does, then your trade idea is wrong. And the price just keeps going down. You hold one contract, you put your stop loss to break even right there. So you put your, so once price hits there, quickly put stop loss break even, and you're able to feed your family nicely. The next one happens again at this, right at this macro time. This one, see, they don't always have to happen right at the macro time. It's just around that time period, you're going to see your setup formed. You're not going to see it at the 10, like at the end of the macro time. You're going to see it at the beginning of the macro time. But it doesn't mean that right as the macro hits, your setup is there. You have to be patient. As you can see, we close just like, no, this is the one. Yeah, so the macro starts right here. And right as the macro starts in this one, right away we inverse it. And I'm telling you, all these high quality setups have the same characteristics. We sweep a high. We are delivering. We have to be careful on what we're delivering from. We're delivering from a bearish fair value gap. So we're delivering from that. We inverse a bullish fair value gap, showing a change in state of delivery. Closing below, we're closing below this bullish candle. So this is now order block. So your entry could be off an order block or whatever. You could have entered right here. Stop loss would be right around here. Close back above. Price should up, close it back above, just do the displacement down. Under this trade, there's many ways to find partials, you know. This is your manipulation because price, what it's doing. The reason why this would be a manipulation is because price, I'm going to reenact this. Price is bearish. And then we come up and we create a higher high. That's what we did. So you have to see here is this is the manipulation because we run down here. From here we deliver up higher, and once we're at this stage, that's when we break down below all of these right here, closing below them. So that's why that's manipulation. And with the manipulation, you can get standard deviations of what price is probably going to trade to. So you see how we trade to the 2 to 2.5 standard deviations are right around here. We see some resistance, and then once price does not trade back down to the 4.5 standard deviations, but as you can see right around that 3 to 3.5 standard deviations, we do get that retracement back. So the standard deviations hold a lot of value in just targets and where you can aim reversals, because if you are trading right around here and you have the 3 to 3.5 standard deviation marked out, you could be attempting to see a reversal within here. So this just goes to show you pretty much just the power of these macros. And this was another really good trade that I actually took, but not on a live account. So we get this V-shaped recovery. We sweep out this high right here. We are delivering from two fair value gaps, this fair value gap, this fair value gap, you know, this consolidation zone, and we close back under, tap back in, and you go short, and it was a pretty good trade. So now I'm going to delete all of these, and we're going to talk about what we're going to do going into tomorrow. Grab some water really quickly. So as you may know, this is now, I'm trading completely solo, and I like it a lot because, I'm not going to say I like it, but it's peaceful to be by yourself and truly just have your thoughts. You know, you're not thinking about what anybody else is doing until your trading is done. You are sitting there and you're just learning. You're just testing the data. You're just testing your hypothesis on what price is going to do. And that's just a powerful thing to do in terms of studying. And when you think of it as studying, when you're taking a trade, you're not thinking about, it helps you to not stress about losing money, thinking about gambling. Because when you're in these discords, you're wanting to take trades because you're spending money on the discord, you know. But when you're here, it's just you and the markets. You have to be in tune with the markets. And I'm able to just kind of see what I'm doing a lot better and just focus, have a clear mind, and just truly be in touch with my goals and what I'm really trying to achieve with this whole trading thing. So, you know, going into tomorrow, what I said going into yesterday was, I wanted to see price come up. So price is delivering, obviously, from this fair value gap right here. So we are going to want to see, will we deliver from this fair value gap, or shall we inverse said fair value gap? All right, so let's go on to the 4-hour chart. Let's see where we are currently in this bullish for Europe. We might come down to the consequent encroachment of this. So price might want to come down to there. If you look on the daily, what do you think the daily chart is going to do? Daily chart looks a little bit funny right now, a little bit funky, but these are the previous all-time highs. I mean, honestly, I think we're going to come back down to rebalance something right around here. So I'm leaning more a little bit bearish, but you don't know. Let's see, is there any SMT? What happened here? Bro, all my charts got messed up. Oh, man. What? Where's the oil? Okay. Alright, I guess that's fine. So yeah, if we go into YM, do we see YM took that high? It did not. Did ES take that high? Q, did we? No, we did not. Yeah, so I'm looking a little bit more bearish tomorrow, but I'm not really, for this week until around February, I'm not looking for a high time frame bias. I'm literally just looking for macro entries, macro time entries during Kills times, taking my trades, studying, testing my hypothesis, and just kind of just getting in tune with the markets, because I know this is going to be a big year. I'm going to pass my funded account this year. I'm staying focused. Next week we have school starting, so that's just putting me more in zone. You know, I'm quitting the ZA next week. That's going to be fun. I'm just a full-time day trader. That's my pure passion in life. That's what I will be doing, because I put my mind to it and I trust what I can do. There's a famous quote by Alex Hormozi: "You don't become confident by shouting affirmations in the mirror, but by having a stack of undeniable proof that you are who you say you are." Outwork your self-doubt. Let's leave it at that, man. Outwork your self-doubt. Are you doubting yourself right now? Yes? Okay, outwork it all. See ya.